Hey Samsung, this is Ria from Samaya, and today we are going to discuss Essay 315, identifying and assessing the risk of material misstatements through understanding the entity and its environment. As we always do, first we'll go and see the objectives of the auditor with regards to this Essay 315. The objective of the auditor is to identify and assess the risk of material misstatement, whether due to fraud or error, at financial statement and assertion level, through understanding the entity and its environment. You see, it's all of a title of SA 315. It's also discussing that the objective of the auditor is to do what was said in the title. It is to identify and assess the risk of material statement with due to fraud or error. They're asking the reason, whether that reason would be a fraud or it would be an error at financial statement level and assertion levels. Financial statement level is where such risk of material misstatement influences more than two or influences a large kind of class of transactions or account balances disclosures as a whole. Like it influences a lot of them. Assertion level is where that risk of material misstatement influences only a particular class of transactions or a particular account balance or a particular disclosure. And through understanding the entity and its environment, including the entity's internal control, you also have to obtain understanding about entity's internal control, thereby providing basis for designing and implementing responses to the assessed risk of material mistake. What is our golden rule? Our golden rule is whenever we find any deficiency, risk, or fraud, what he has to do, auditor has to put some remedial measures by responding them appropriately. They are also saying the same thing here, has to respond for the assessed risk of material misstatement. This will help the auditor to reduce the risk of material misstatement to an acceptably low level. This is what the benefit for assessing the risk of material misstatement, so that the auditor could respond to them and implement those audit procedures and perform those audit procedures so that that risk would be reduced to an acceptably low level. And these were few definitions, and this is not so important also, just revise it once, one day before the examination, and that's it. That's it. We'll move on to essay 315. Yeah. The auditor shall document. What the auditor should document, what all the things he had done, he should document that. Under essay 315, what is he doing? He's identifying the risk of material misstatement. He's identifying and assessing that. Or he has to document the identified and assessed risk of material misstatement at financial statement and assertion level. What we have seen in our objective, financial statement level, assertion level. And he has to understand the entity and its environment. So what he has to document? The risks that were identified relating to the controls about which auditor has obtained an understanding. He has to also understand the entity's internal controls, right? What a risk he had identified in the internal controls, he has to document that. And he also the key elements of understanding obtained regarding each of the aspects of entity, its environment, and the risk assessment procedures performed. What else he has to document? He has to document the key elements that he had found while understanding the entity and its environment. He has to find, okay, after all this, what all the things he has to do when he find any kind of a risk of material misstatement during the planning, while planning the audit, he has to discuss with his engagement team to plan and perform the audit effectively with desired audit procedures, etc. So, what do he also has to document? The discussion among the engagement team and significant decisions reached. He has to document all the four things: assess the risk of material misstatement and the risk with regards to internal control and key elements of understanding the entity and its environment, and discussions of engagement team and decisions reached. Risk assessment procedures and related activities. What we have discussed? We have discussed that auditor has to assess the risk, identify and assess the risk. When he has to do that, while he has to do only prior to the audit or while planning the audit or during the audit or after completion of audit, he has to do at two stages. That is while planning the audit and while during the audit also. And after the audit, that comes under subsequent events. Prior to audit, it comes under SA 200 series like preliminary activities. For this 300, it is while during the audit and during the audit plan deals with as a 300 series, whole 300 series. So, obtaining an understanding of entity and its environment, including entity's internal control, is a continuous dynamic process, updating and analyzing information throughout the audit. all the risk assessment procedure. He has to assess the risk and change the overall audit strategy or the audit plan or the audit program with regards to the risk that he had found during the audit. So it's always a dynamic procedure. Auditor plans the audit and exercises professional judgment throughout the audit. On what are areas he applies professional judgment, and how does he plan? First thing, assessing the risk of material misstatement of the financial statements. See, what's the objective of the SA 315? It is to assess the risk of material misstatement. Where were those risk of material misstatement content? Were the misstatement contents in financial statements? Okay. And second thing is why the auditor went for an entity to audit the financial statements, right? While doing that financial statements, what he has to check. Financial statements were prepared by management through their applicable financial reporting framework, which consists of accounting policies and accounting applications, estimates, right? He has to also consider the appropriateness of selection and application of accounting policies and adequacy of the financial statement disclosures. Where has to check that? We has to check that because he went to audit the financial statements only. And while doing the audit of financial statement was the main duty of the auditor to obtain sufficient and appropriate audit evidence. While evaluating the sufficient and appropriate appropriateness of the audit evidence obtained. And he has to respond to the assessed risk of material misstatements with regards to this SA 315. And he has to determine when there were risk and obtaining audit evidence, he could use the audit sampling or etc. Right? Then at that situation, he has to also determine the materiality as per SA 320, as they had find some significant areas where the risk of material misstatements could occur. You have to identify that areas where special audit consideration is necessary. So while doing all these things, while planning audit, these were all the things that required for the auditor to plan the audit, of to frame an audit plan, where in that procedure he has to use some professional judgment with regards to that. What are all the things with regards to SA 315? Assessing the risk of material misstatement with the fraud and identifying the areas where special audit consideration is required and responding to the assessed risk of material misstatement. These were with regards to or specially customized for SA 315. But in general, why auditor had went to audit financial statement, you have to check the appropriation and selection of accounting policies and evaluate the sufficiency and appropriateness of audit evidence obtained. And after that, when there were risks and the financial statements audit evidence, what you have to do? You have to do audit something. For that, you need to determine materiality also. SA 315, materiality will be discussed in SA 320. That's tomorrow. We'll discuss that. Information obtained as audit evidence to support assessment of risk of material misstatement. That the auditor had got some information that emphasize more that the risk of material misstatement exists. Then what he has to do? He has to obtain audit evidence about such class of transactions or account balance or disclosures and the related assertions, and about the operating effectiveness of the controls. Controls here was internal controls, even though such procedures were not specifically planned as substantive procedures or tests of control. This is they're talking about that he had got some new information with regards to some risk of material misstatements. Why he has to dynamically enhance the audit procedures or put some extra efforts and plan further audit procedures, even though they were not planned as per audit plan. So he could change those things. As we have discussed that auditor has to obtain sufficient and appropriate audit evidence. How can auditor obtain sufficient and appropriate audit evidence? Through inquiries or observation or inspection of any kind of documents, reperformance, recalculations, etc. Right? Now the auditor is doing inquiries within the entity, and whom he is inquiring and for what information he is inquiring. We'll just discuss that. Inquiries directed towards TCWG may help the auditor understand the environment in which financial statements were prepared. This is where even it's the objective of the auditor under 315 also, right? With to understand the business entity environment. As we have gone to audit the financial statements, they have said that in which financial statements were prepared, and that's it. And after that, below TCWG, what do we have? We have inquiries directed towards internal audit personnel. We have to gain more information with regards to internal audit procedures that were performed, whether we could use the work of the internal audit, or we get in information whether how we rely on the internal audit reports, etc. And inquiries of employees involved in initiation, processing, and recording complex or unusual transactions. This is with regards to the financial statements, right? Financial statements. Inquiries directed towards in-house legal counsel in order to obtain more information with regards to any kind of litigations, compliances with laws and regulations, and knowledge of fraud, and directed towards marketing and sales personnel with regards to marketing strategies, sales trend, or contractual arrangements. Why has to inquire this thing? Inquire marketing and sales personnel is to obtain an understanding that this entity is going concern, to evaluate the going concern of this entity. TCWG with regards to the business environment in which financial statements were prepared. After that, internal personnel with regards to internal audit procedures, and with regards to unusual transaction has to inquire employees, and in-house legal counsel with regards to any kind of litigations of knowledge of fraud and non-compliance of any kind of laws or regulations, and inquire towards the marketing and sales personnel with regards to sales trends and contractual arrangements in order to obtain understanding of going concern concept. And analytical procedures perform, you see, what are analytical procedures is, into tell it as in short, that is comparison of financial and non-financial information, like comparison of salaries to the number of employees, and rent to the square feet that was rented or got leased. Why this is because to find a range of, you see, average range was there for every kind of industry all the entities were in, right? To evaluate whether this entity is having the expenses or the profit margins were in within the range or not, or there were any kind of unusual transactions or fictitious expenditure or window dressing had happened or not. And with that said, we'll just move on. What are the analytical procedures here? Analytical procedures as risk assessment procedures may include both financial and non-financial information. Okay, analytical procedures, they're talking it as an audit procedure now, which includes both financial and non-financial information. And the analytical procedures may help. They're talking about the benefits of analytical procedures, why we have to do. To identify the existence of unusual transactions or events, that amounts, ratios, and trends that might indicate that they have audit implications. They are talking about to identify any kind of unusual transactions or events, like the transactions were not of an arm's length price, etc. That what we see in our international taxation DT if you're a final student. They're talking about like that. And when analytical procedures use data aggregated at a high level, the results of those analytical procedures only provide a broad initial indication about whether a misstatement may exist or not. It is like we are doing ratios within a range, right? Then when there were ratios were unusual or they were too high or too low, we would get a doubt on that, right? And that is not a particular misstatement, or that doesn't signify that, but it helps to direct the engagement team's efforts with regards to that there exists some unusuality in that class of transactions or that account balance. So it just gives a broad initial indication. That's just an indication that there could exist a material misstatement. Information obtained in prior periods. With regards to information obtained in prior, how does this information obtained in our prior periods, that auditor's prior period or entity's prior period, would help the auditor in this current period? The auditor's previous experience with the entity, that this auditor, this entity, and audit procedures performed in previous audit may provide the auditor with information about such matters as, the first thing they're asking about, the combination had repeated. Now there's a combination that was changed here, that this auditor had audited some other entity and this entity's previous year auditor was somebody else. In all the situations, what are the previous prior period information that could be help the auditor in audit of this current year, this entity, about the past misstatements, misstatements that the entity had done, or the past misstatements that auditor has experience with other entity. That one. And the nature of entity and its environment and entity's internal control, including deficiencies of internal control, would help the auditor with regards to that. depends upon the nature of the entity, whether it's a hospital or whether it's a hospitality industry, whether it's steel business or oil exploration business, and its environment, that environment, all the laws and regulations that the entity has to follow, and the internal controls and the deficiencies of the internal controls that were identified in the previous year or were made in the previous year, and the significant changes that the entity or its operations may have undergone. That is, last year they had few kinds of operations or a few changes or due within the entity's internal controls or its environment. Then it's the playoff period financial period, which may assist the auditor in gaining sufficient understanding of the entity to identify and assess the risk of material misstatement. Since there were this time, there were few changes in the entity for this current period. From nowhere, he need not understand the entity. He could compare with the previous year's operations or internal controls, and he could just use them and apply with the changes that had happened in this current year. These are all the things, information that would help the auditor in audit of this current period in this entity with regards to the information that he had found or obtained in the previous periods of the entity or the auditor himself, or the misstatements with regards to misstatements and nature and entity's internal controls and such changes in the operations that the entity has undergone. As we have been said that the auditor has to obtain understanding of about entities and its environment. What does business entity and its environment consist of? Relevant industry factors, including industry conditions such as competitive environment, supplier and customer relationships, and technological developments. As we know, we have to understand about the industry conditions, but why competitive environment? Competitive environment is because of its to evaluate the going concern, and with regards to customer and supplier relationships and technological development, and with regards to the relevant regulatory factors, including its regulatory environment. While inquiring the internal legal counsel, we have asked about the legal regulations and compliance of laws, right? So the regulatory environment also has to be checked. An understanding of nature of entities enables the auditor to understand such matters as whether the entity has, while understanding the entity and entity environment. What is the entity and entity environment here? The competitive environment, supplier customer relationships, and technological developments have the regulatory environment. These are the things you have to obtain understanding. And while understanding that, he should also understand whether the entity has a complex structure or not. A complex structure is like whether it has investments in various companies and it had branches in all over the globe, and with regards to the subsidiaries and ownerships with regards to that, and ownerships and relationships with related party transactions or etc. Any kind of relationships and ownerships, and in business operations, that the foreign business operations that were they having, or investment activities and financing activities. Operations, investment, and financing. Have you got any kind of vibes here like cash flow, right? Business operations, investment, and investment activities, financing, and financing activities. So it's easier to remember like that when you categorize or mix in with that cash flow statement. And why we have went for the audit? We have a went to audit the financial statement. What the financial statement was prepared. The financial statement was prepared through accounting policies, and they have entity has a business and their objectives and strategies and their risk, right? And we have to also talk about obtain understanding about that, and measurement and review of financial performance. You need not remember these two, any we would tend to forget that, but all the above the things were something that we already know. We could easily understand and replicate it in our examination. As we have to obtain understanding with regards to the internal control, what are internal controls means? Internal control is designed, implemented, and maintained to address identified business risk that threaten the achievement of entities' objectives that concern. This internal implementation, design implementation, maintenance was the responsibility of the management. Why they were implementing that? To identify the business risks that would threaten in achieving the objectives or hold back in achieving the entity's objectives, that were reliability of the entity's financial statements. When the internal controls were not designed, implemented, and maintained, they create a threat, so that the financial reporting would be not reliable. The effectiveness and efficiency of the operations would get affected, and with regards to the compliance of applicable laws and regulations and safeguarding of assets. These are all the areas where we have to implement the internal controls so that to achieve our entity's objectives. with regards to reliability in financial reporting in its operations effectiveness and efficiency. Effectiveness is where to get the desired output. Efficiency is to done on a economical way with a minimal effort or with minimal amount of money that was involved to get the desired output that we want to achieve and compliance with all the applicable laws and regulations in safeguarding assets. And internal controls can provide an entity with a reasonable assurance that about achieving entity's financial reporting objectives. It is even the preparation of financial statements was the responsibility of the management. So they have to implement internal controls that give a reasonable assurance in achieving financial reporting objectives, as financial statements have to be prepared as per applicable financial reporting framework. And even though they're why only reasonable assurance, because why they cannot give full assurance or an absolute assurance, because there exist some inherent limitations of internal control, like human judgment and decision making, which could make a fault or breakdown in internal control or any kind of human error or with human intervention. And that's why they're giving reasonable assurance here with regards to achieving entities' financial reporting objectives. Controls can be circumvented by collusion of two or more people or inappropriate management override of internal controls. How well the internal controls were designed, but 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 when two or more people collide or management itself overrides those internal controls, there might be a collusion like breaking down of the internal control so that they do not operate effectively. That's what with regards to the internal controls in SA315. We'll see what all the components that internal control consists of. This again, or it could be asked, it was widely asked as a direct question. It's favorite, I say favorite question also. Control environment, entities risk assessment process, the information system including related business process relevant to financial reporting and communication, control activities and monitoring of controls. You see, whenever we think of internal controls, what do we think? We think about the control activities. That is, who were implementing that in operation, who were doing that internal controls. Okay, first that, and who were doing those internal controls, and who that there should be someone who monitors the one they are doing. So, in control activities and those who monitor those controls, two things. And there should be someone who should frame those internal controls, all the rules and regulations on policies and procedures, right? Here is a control environment. This is mostly done by the top level management, at least that has to be done. The entity's risk assessment process. There also should be a risk assessment process. This is mostly done by the management who evaluate the assess the risk that the internal controls do not achieve the entity's objectives. Management has to assess the risk of that process and all the information system, including all the process. And that thing is that they have formed the policies and procedures, that but there should be a system so that the one who is doing the internal control activities has to know them, right, how to do them. For that information system, like a system to communicate with the people who are doing the internal control should be there. This is a cyclical process. First we will design policies and procedures, and the management shall do assessments whether such policies and procedures could could achieve the objectives of the entity or not. They have to assess the risk with regards to that, and that has to be all the policies and procedures that they have decided has to be communicated to whom? To the one who does the internal control activities, and who does they have to be all a monitor, like a manager who monitors the controls. That's it. It's very simple. You could remember and write it in your exam. Manual or automated elements in internal controls. Controls in a manual system may include such procedures like approval and reviews of transactions and reconciliation, follow-up, reconciling items. These all comes under manual controls, manual internal controls. Controls in IT systems consist of combination of automated controls as well as manual controls. Manual controls for what? Approvals, reconciliation, follow-ups, that what humans do. Automated work IT uses to initiate, record, process, or report transactions or other financial data for inclusion in financial statements. The systems and programs may include controls relating to corresponding assertions for material accounts may be critical to be effective for functioning of manual controls that depend on IT. You see, all the approvals reconciling was done by manual. But what does IT do? IT initiate, record, process transactions or financial information which is used in financial statements which were critical in effective functioning of manual controls, because based upon those data we do analysis and take decisions as a management. So they're talking about the interrelationship between manual and automated controls, and what are automated and manual controls, and that's it. And what's control environment? Control environment includes the governance and management functions and the attitudes, awareness, or actions of those charged with governance and management concerning the entity's internal control and their importance in the entity. You see, how the entity, the soul of the entity, how the management philosophy or the organization philosophy or values, code of conduct, these all comes under the control environment, all the policies and procedures. What are the elements of control environment? Like communication and enforcement of integrity and ethical values, commitment to competence, participation by ECWG, management philosophy, operating style, organization structure, assignment of authority and responsibility, human resource policy and practices. These are all the things that were elements of control environment. If you read it 2-3 times, you mostly write 60% of this answer. But the control environment in itself do not prevent or detect or correct a material misstatement. This was asked on 2 to 3 times in the MCQ booklet, which we have discussed there. You check out the videos there. It may influence the auditor's evaluation of effectiveness of other controls and auditor's assessment of risk of material misstatement. You see, even control environment is a manual control, as we have mentioned here. The approvals or decisions that were very critical affect the manual controls, the approvals or the follow-ups or reconciliation, because it is widely dependent on IT. And here also they're talking that the control environment is a manual control which do not prevent, detect or correct material misstatement by itself, which widely affects the auditor's evaluation of effectiveness of controls and assessment of risk of material misstatement. Control environment affects the auditor's evaluation of internal controls and risk of material misstatement. They are talking about that. And what are the different types of potential misstatements? We have to assess what risk of material misstatement. What those misstatements? What are the categories of misstatements? Assertions about class of transactions or events for period under the audit. The occurrence, whether the transaction and the event has been recorded that have occurred or pertain to the entity. You see whether the event or transaction had been occurred, about the completeness, whether all the transactions have recorded or not, with the accuracy with regards to the amounts and data that's recorded were accurate or not, and cutoff is where transactions have been recorded in the current accounting period. It is not including the next year finances, next year transactions in this current year only. It should not be that. There should be a proper cutoff also. And classification. Classification is regards to classifying under headings like standard, substandard with regards to banks and current, non-current, like that. Assertion about account balances at the period end. You see, events record. This is mostly with regards to the profit and loss account. This is with regards to the assertion in balance sheet. And these were with regards to the presentation and disclosure, and that's it. With regards to existence, what do balance sheet consists of? Balance sheet consists of assets and liabilities, whether they exist or not. And with regards to the ownership, the rights and obligations, the entity holds the control, or whether the entity has obligations to pay the liability or not. And with regards to complete, whether all the assets and liabilities have been completely recorded in the balance sheet or not. And with regards to the valuation and allocation of assets and liabilities equity, including in financial statements, were appropriate, and the allocation adjustments were appropriately recorded or not. With regards to P&L amount, what we have to choose: occurrence of that event, completeness, accuracy, cutoff, and classification. Here we have to see the existence. Here they have occurred or not. Here they have existed or not. With regards to rights and obligations, and completeness, as there were assets and liabilities, rights and obligations obviously should follow on. Completeness, here also completeness. And with regards to the valuation and allocation, we are here doing the accuracy. With regards to the amount within P&L account is accuracy or not. Here there were valuation and account allocation of assets and liabilities. And with here the cutoff and classification. And with regards to assertion about the presentation and disclosure, the occurrence and rights and obligations, or the disclosed events. This is presentation like notes to accounts or disclosures that were given below the financial statements about the occurrence of events or right and obligations of assets and liabilities. And completeness, obviously, classification and understandability. The financial information is appropriately presented and described, and disclosures were clearly expressed or not. And with regards to accuracy and valuation, the financial and other information were disclosed fairly at appropriate amounts or not. And with that said, we have completed our essay 315.